Voyager Technologies Chairman and CEO Dylan Taylor. He's speaking to us with, Dylan, just minutes to go before your first ever close. That $31 a share pricing was above the original range of $26 to $29 a share, but you also raised the size of the offering from 11 million to 12.35 million shares. What do you think is really driving this oversubscription here and the great interest?
Yeah, well, the feedback we get, Liz, first of all, thanks for the compliment, but the feedback is really the management team we've assembled. We really have a best-in-class management team. We're focused at two of the growth vectors that investors love. One is space infrastructure and commercializing space, most notably the commercialization of the International Space Station and its replacement. And then the second, of course, is national security and defense. And we play at the intersection of smart missile defense. And of course, that has got a big thesis around Golden Dome and building out that layer of defense for the U.S. and its allies. So I think between the team we've assembled, the technologies and capabilities we have, the contracts we have, and hopefully the contracts we'll win, I think that's what really investors are reacting to.
We've spoken to a lot of companies who say that they are involved in the Golden Dome project that is very important to President Trump. This anti-missile defense system for the United States, similar to the Iron Dome in Israel. Tell me what it is that you could do for the Golden Dome.
Right. Well, Golden Dome hasn't been defined exactly, but one of the key programs we think that will be part of the Golden Dome initiative is Next Generation Interceptor. That's the large contract that Lockheed won in competition with Northrop Grumman. Mm-hmm. And we're on that program with proprietary propulsion technology that allows you to modulate solid fuel propulsion. That's a game-changing technology in our view. And then we're also on that with optical navigation technology. This allows, when the missile is actually in space, to orient itself by using the stars to position itself in 3 dimensions.
You've been in space. I mean, you went up in a Blue Origin rocket. This is very close to your heart. You talk about the Starlab. This is your big commercial effort. What does it do? Do you eventually foresee a place where enterprises are interested, and not the Starship Enterprise, but enterprises are interested in going up in space and conducting business or experimentation?
Oh yeah, without question, Liz. It's already happening. So we have about 80% commercial market share on the International Space Station today. So today we're running missions on the International Space Station on behalf of governments, universities, and companies. So that's happening. What is the main issue is it's supply constrained. And also, if you're a biopharma company, for example, and you want to conduct a drug formulation experiment on the ISS, you might have to co-own that IP with the government. In a commercial space station setting, not only is it optimized for research, that's why we call it Starlab, literally focusing on the laboratory elements of microgravity, but it's also a commercial model, so we can set commercial terms, commercial IP ownership. And again, this is a situation where supply is not addressing demand, it's actually creating demand. So we see a need for multiple commercial space stations in the 2030s. We'll build one, there'll be others that build commercial stations as well. And keep in mind, Liz, this has happened before, right? When the space shuttle was taking astronauts to the International Space Station, the government decided to privatize that, right? And that's what gave birth to SpaceX, that's what gave birth to these other commercial launch companies. We're just doing the exact same thing on the destination side.
Dylan, while you're talking, your stock on this network has jumped another 8% to, let's see, $56.75. People are highly interested in the future of this, but I do have to say and ask you, the prospectus that you put out basically states that the funding from the government will generate a significant portion of revenue, profitability, cash flows. What would you do if Starlab sees its funding cut? I mean, we have seen what's going on in Washington and with the bill, the tax and spending bill. They're looking for places to cut. And Elon Musk, of course, of SpaceX, had gotten into a little bit of hot water with the president by criticizing too much spending in that bill. Have you modeled for that?
You know, it's always a risk, of course, Liz, and my job as CEO is to manage risk. What I will say is in the president's skinny budget, which is presumably the most draconian budget that could pass, probably wouldn't pass, but in that budget, the commercial space station line item was actually quite robust, and I think it was the fourth bullet in the president's skinny budget manifesto actually talked about the importance for commercializing space stations. So we feel, that there's a lot of alignment there. Because keep in mind, you're doing this, Liz, to save money for the government, right? It's not to increase spending, it's actually to invert the model so the government can actually spend less and get superior outcomes, just like they did with launch. We've seen that, it was roughly, I think, $100,000 per pound to orbit with the space shuttle, and now we've seen what SpaceX and others can do, bringing that launch cost down. It's very similar on the commercial space station side.
Dylan, congratulations on this first final hour of trade for Voyager, which is now today a publicly traded company. We'll continue to watch it, and please come back.
Thank you, Liz. I will. Thank you.